Checking everybody. Good morning, everybody. I hope everyone can hear me okay. We are live, and this market is alive. This market just won't quit. Turbo members know that. Option Pit watchers know that I've been talking about this for a long time. The melt up to end all melt ups, driven by a number of tailwinds that we're going to talk about today. Let's do a little show and tell. Okay, I'm going to show you mine. And that's pretty much it. I'm not going to show you anything too offensive. But I'm going to show you some things that could potentially get you something pretty special in this melt up that I've been talking about for a while. So I am Hans Albrecht. I am the Director of Income Trading at Options Pit. Of course, I've been doing this for almost 3 decades in the trenches, frontline trading, almost $1 billion in options strategies managed over that time, a dozen income ETFs, market maker for 15 years. 15 years I went only getting a check if I made a profit. That is the way you learn this business. That's the way you learn options, because my goodness, that is pressure to perform. Pressure to perform. Can everybody see my screen? Yeah, sorry. You know what? I don't like doing the whole like slideshow, kind of share, because it's too hard to navigate back and forth. So again, happy everybody's here, and we're going to talk about some cool stuff today. We're going to talk about the melt up that is upon us. Let's take a look here. I threw some charts in here this morning. We're a little bit higher, of course, but we can see the SPY after having snapped above this level from pre-crash, pushing up, and for about 700 points now, I've been saying, listen, the pain point is up, and I've been showing on the State of the Market. I've been showing on all the shows. I've been saying, listen, this is one of the most hated rallies. Having done this for a long time, I'd say this is one of the most hated rallies that I've ever seen, at least from the institutional standpoint, right? From the smart money. But the smart money has missed out. And so they've got this FOMO now, which is pushing them back into the market. Retail has been correct, right? Go retail. Retail is the smart money now. That's how we're going to have to categorize things, because retail was buying all the way down, believing in the future of this country, of capitalism, of AI, of productivity growth, etc. So shame on those institutional people for not believing in it. So here we are. We've got, this is one of the charts. Actually, let's take a look at the, we've got the SPY here, and we've got something interesting I see happening. So we've got the IWM versus SPY. So I'm looking at this. This is a relationship. When this is going down, it means Russell's not doing as well versus the S&P. And then when it's going up, the Russell is doing better. I am watching very, very carefully here for this to break out, because we're starting to see some outperformance from the Russell 2000, which to me confirms something that I've been talking about for a while, which is I think rates are going to come down. Inflation is not going to be an issue. And we're going to get into each of those things a little bit today to help keep you informed as to what the bigger picture is, right? As traders, we can kind of get caught in the noise and the trees without sort of zooming out sometimes, which is really important to do. You want to really look at, I love these relationship charts, because they give you the ability to say, hey, this is where some money seems to be moving into, meaningful money, right? If I look at one stock, it's one stock. But if I look at IWM versus SPY and I start to see this breakout, that is something I've got to take notice. Now, another thing I've been looking at for a little while, and I talked about this as this broke out, this is another relationship chart. That's ARK, which is kind of silly money, AI. It's got Tesla, but it's got a bunch of, kind of perhaps more speculative type stuff. Not entirely. There's quality in there too, but it's a little bit more kind of chasing money, fast money, right? And when this is going down, it means money is out of the more kind of aggressive plays and into maybe the XLK, which is a bit more the big cap tech, right? A little bit more of that certain strong balance sheet kind of world of big cap. And then when this chart is going up, it means ARK is outperforming big cap. And what do we have here? When we broke out, I said, listen, I think we can get right to the spot, which is there's a fourth top going back here, which I'm not. Oh, no, this is it. Sorry. 1, 2, 3, 4 tops. And I said, we're going to get right here. And then we're probably going to pull back and pause for a commercial break because this is the spot. But I said, listen, we are going. It's just a matter of time because I feel so strongly about some of these trends and the possibility that we're going to kind of inflate a little bit of a boubelle, a little bubble in various areas over the next couple of years. So I think there's some very exciting things happening. One thing I'm watching is the TLT, right? So I do believe it's quite possible that maybe the 10-year is one to watch. You trade something like an IEF is probably maybe a safer bet if you think Powell's going to pivot at some point, which I think he is. But I want to see TLT confirm, and it's inching its way up. I want to see this break out a little bit. That's going to give me more confirmation that rates are coming down. This could be a generational opportunity in playing fixed income, in fact, for that rate cut. So I think there's some really interesting opportunities across the spectrum, tech, bonds. I think there's some really cool stuff happening out there. And this IWM is going to be a kind of a good indicator, as well as that TLT is going to be a good indicator. So here's your longer term IWM. Here, let me get, I want to make sure I can see any questions or whatever, but maybe Christian, you can field any questions so that I don't get too distracted. And then, throw in all the links that we need to throw in at some point here. Let's go. Let's see. Here we are. Okay, good. Good morning, everybody. Surf Danson, Hogan, Robin, Rawhide, Jose, Kat. I love to see you guys. It's like joining a group of friends at the local pub for another little powwow session about markets. So exciting stuff. Okay, great. So yeah, exactly. I love that, Robin. The market is broadening out. Why would it be broadening out? Because if rates come down, who does that help? It helps where the bulk of employment is. It helps the huge segment of the economy, the Russell, smaller companies that need rates to come down. They really do need rates to come down. Microsoft and Apple don't care where rates are. They love it because they have all this cash that's sitting there making tons of money. But they're not worried about their survival based on rates and what they can borrow at. Exactly. Small to mid-sized businesses. So IWM is suggesting something that I've been saying for a while now, which is I think rates are going to come down. We're now getting confirmation from IWM that could very well be the case, which it is. I mean, AI is going to it's going to crush inflation over time, little by little, but it's going to happen. And so those are some good signs that I'm looking at. So I want to know, where are rates going? I want to watch labor, right? Labor is going to be an issue at some point, which we'll have to see how that unfolds. Here's your VIX futures term structure. This just means it's a happy market, right? It's a happy market, as it has been for a little while. So a couple tailwinds. Inflation is heading lower, and we're going to talk about my MTI indicator soon. Very, very, very key to giving you an indication of what's going on. It's going to give you an indication of momentum. It's going to give you an indication of, are things slowing? Is it more of a kind of income-y type market? We're not getting a super, big signal that things are blasting up to the upside, perhaps, and then that's going to give you a signal to kind of let's play that income a little bit more. It makes sure that you don't get in early. It makes sure that there's something going on, something tangible, which is really, really nice about that indicator. So let's talk about some of the tailwinds we've got. Inflation is heading lower. I'm sorry, but it is. I know eggs are expensive still. Income-y, like gummy. It's very incomey. Yeah, incomey trades are fun. Incomey trades are fun, but they need certain things, which we'll talk about in a moment. Rates are heading lower. Inflation is heading lower. Productivity is going to rise like we can't even imagine. Why does this market keep pushing up? Because that productivity is going to move into the broader economy. So you can actually play AI by owning the broader economy. I mean, there's going to be disruption, right? Can't remember who it was the other day. They said there are going to be companies collapsing because they are not going to move quickly enough. And keep that word quickly in mind, right? Quickly is going to be a big part of what people are going to have to realize as we go forward. Quickly. Rates are heading lower. Productivity is rising. It's affecting all of us, right? It's helping us on an individual basis. It's going to help companies, sectors. It's going to blow through everything. Places you didn't even know it was going to help. Agriculture, it's already helping with robotics and automation and things like that. But even the most kind of like basic companies are going to be able to benefit from this, and profit margins are going to be on fire. I've talked about my Goldman idea and how they're able to do so much more now, cut down the cost of doing IPOs, doing certain kinds of processes that they've been doing forever. They are not going to pass those savings on to clients. Not much of it. They're not going to call their clients and say, listen, we're just feeling good today and we're going to give you a bunch of money back because we're saving money on all sorts of stuff, labor, processes. He said, the CEO said we can do 95% of what we used to do with an IPO in like a couple days with AI. 95%. What does that mean? Profit margins are going to soar. So we're going to have this incredible honeymoon period in markets where we could see profit margins really, really soar for people who move quickly. So low vol environment is what we want with income trading, right? So we want stability. We want to lower our risk. What are we doing in income trading? We're kind of creating a bit of a bond proxy, right? We want to create an asset that's throwing off cash to pay for whatever, vacations, tuition. You don't need to pay for tuition anymore. Just get ChatGPT for $20 a month. Yeah, those bankers are greedy, South Bay. They are going to put all the... You think they want to give that money back to clients, or do they want to stuff their already inflated bonuses? The vampire squid. But you know what? That's why I invest in them. I make fun of them, but I invest in them. I invest in people who are very, very smart, and the smartest guys in the room and gals in the room. And I think that's always going to be a good thing to do over time. They're going to find all those loopholes. The foundation of income trades is based on stability, and we want stability. Do we get stability in a VIX 50? No. Do we get stability in a VIX 10? Kind of. If you get involved with us, you're going to take something called the Edge series. It's going to explain things to you that you've never seen before. I 100% guarantee you have never learned the insight that you learn in this program, where you're going to basically learn things that's going to, even if you never trade an option, this is going to change the way you look at it, at investing. So the bigger the premium, the better? No. What are we in? We are in the business of keeping premium. You can go trade all these crazy stocks and sell puts and calls and do all these things. You got to decide, what do you want to do here? And this is a question I often ask students and various people I talk to. I say, listen, are you trading for excitement, or are you trading to make money? And I know it's a hard question. I'm not judging anybody, because sometimes people know what the answer is, but sometimes they think they know what the answer is. They trade to make money, but then they find themselves getting involved in trades that are very dangerous, that they shouldn't get involved in. And then over time, they realize that they're trading for excitement. Right? It's the action, 100%. And I'm not saying that's the wrong thing. If you trade for excitement, then go for it. Have at it. But if you trade to make money, and a little excitement, right? We trade Nvidia, we trade stocks, we trade Amazon, we trade Netflix, we trade boring stuff like Costco that's up like 50%, that's up like 100% in the last couple of years. Yeah, that's really boring. We trade fantastic stuff, fantastic names. Doesn't mean you have to trade the most boring names in the market, but you need all these foundational elements to be in place to make smarter decisions, right? You can go for excitement. I did a trade in yesterday for members, and I said this could be a 10 to 20 bagger. It is a very unique trade. That is not normal trade. That's pretty exciting, right? That's pretty exciting. That is, I'm not saying that is your normal trade, but when it's time to be strategically greedy, we're going to do that. People get into trouble when they're just greedy, left, right, and center. And nobody has a crystal ball in the end where the markets are going. But if you continue to target good setups over time, you're going to do better. There's just no two ways about it. So let's see here. Smart money was late to the party. Let's get to the goods here. We're going to talk about the smart money. We're going to talk about AI and productivity a little more. We're going to talk about inflation. So look at the smart money. As retail was getting back in, smart money was going, you know what? Maybe we'll dip our toes in again. Here, I've got a better chart here. Here we are. Oh, they're coming back into it. They're coming back into it. Now, I will say they have come back into it a little more lately. And it could turn into a FOMO panic on the institutional side and on the smart money side, because they were left out in the cold for a bit there on that bounce back. So that is more. And then also think of that foreign money that left. Now, I'm not saying the level of foreign investment in the US is still very, very high. I'm not saying that it's under. I'm not saying they're underinvested, but compared to where they were when tech, and the U.S. leads in tech, it leads in like 8 of 10, innovation categories. There's just no. Maybe it changes a little. Maybe China, kind of, gets on board here, but I don't think so. They're basically using U.S. technology to kind of prop what they're doing up. So the idea is, if you start to get some of that foreign money coming back in, then that's going to be very interesting. So positioning, number one, positioning is getting this market going again, or has gotten it going. That's what I've been saying for 5,500. If you've been watching the shows, I've been saying, listen, pain points to the upside. Nobody's in this market. Here we go. Now, let's talk about AI. The tailwind is exceptionally big. We're not going to spend a ton of time on this because I always talk about it. And I feel like it's a broken record stuff, but it's a profitable broken record. That broken record is music to our ears. Wait, no, the broken record is music to our wallets. That's the better way to look at it. So I think people are underestimating the impact of AI. And so if you look, McKinsey says 4.4 trillion in added productivity growth from corporate use cases. You think when CEOs start getting on board and going, oh yeah, buddy down the road is starting to save money or improve his productivity in various processes, you think that CEO is not going to be screaming at people to get on board? So it's going to happen. It's going to equal what I've written down here. It's going to equal panic. It's going to be a slow panic at first, and then it's going to spread like wildfire. It's going to be a rapid panic with waves of panic and adoption. Look at this. 47% of the C-suite says their companies are not developing their AI tools fast enough. Here we are. 92% of companies plan to invest more in Gen AI over the next 3 years. But, oh, look at this. 1% believe their investments have reached maturity. That means there is room. There is massive room for certain companies that are going to literally play into this panic over time. Now, so we've covered flows. We've covered AI. Now we are going to cover a little bit of inflation. So inflation has been coming down, right? Yeah, a lot of companies don't understand AI rawhide. And you know what that means? That means companies that can explain it to them and come in and place a layer of insight onto their silos, right? We've seen it happen in telecom companies for sure. What's a telecom company? Like other companies, they've got silos of data all over the place. Yeah, they've adopted technology like we all have over 20 years, but they're just scattered about all over the place. There are companies that that we invest in, that my members invest in, that are taking advantage of that. How many their phone's going to be ringing off the hook, right? People are going to be calling up these companies going, "I know I need to do something. I'm not sure what it is. Can you help me?" And the answer on the other end is going to be, "Yes, I can." That's right, Steve-O, Palantir, and there are some other really, really well-positioned companies that are going to be, they're expensive. IBM positioned for this, maybe even Dell Technologies for some of the hardware requirements. I think that's kind of an interesting play too, but there are lots of interesting ways to play this. Now, 100%, 100%. Software as a service is very interesting to me. I think it could be disrupted quite a bit though. So it's going to be interesting to see where, I'm not saying someone's going to just use ChatGPT over ServiceNow or Salesforce, but over time, we're going to see some very interesting things happen. So that's why some of my favorite plays are kind of those real picks and shovels that you can't, like nobody can come in and go, I'm going to build a better GPU than NVIDIA. Like nobody knew. I mean, they've got competition, but somebody can, but software is kind of lower hanging fruit in a way. So those companies that you're talking about, that we're talking about, Palantir and the other ones, need to really kind of get in there and establish themselves as, when you establish yourself as a go-to, if you can get out there ahead of everyone else and grab that market share, you get them into their ecosystem, right? A bit like NVIDIA. People don't ever talk about it, but CUDA is their secret weapon. So many people just are going to stay with CUDA and the NVIDIA ecosystem. Simple as that, because it's just so difficult to come out of. You wouldn't even want to leave it. It's amazing. But if you did, it'd be so difficult to port everything you've done elsewhere. So many developers, millions of developers have made for NVIDIA. It's kind of like building something for, that works on Windows and then suddenly deciding you're going to make it for, I don't know, some other Linux or something. Does that make sense? You're just going to keep Windows, that system. So CPI, yes, we've seen some ticks up, but what are we seeing? Edging lower, smallest core gain since January 2021. Producer costs now below CPI, a classic leading edge cool down sign. Headline PCE, right where the Fed wants it. You're going to see goods, you're going to see services. Sniper Baker, your Amazon trade on June 30th cost me 1 cent and it's now trading at $50 per contract. Well, I aim to please, Sniper Baker. Thank you very much. That's why you guys cannot miss any of these shows. And I dare say you cannot miss the wonderful opportunity that I want to present to you. So, job openings. This is an area where, job openings, we've already heard about people at, in the entry-level job market really struggling. I have 3 kids. I'm like, wow, what are my kids heading into? This is going to be something pretty special, from something we've never seen before. I think the disruption is pretty incredible. Decelerating average hourly earnings. So what we're going to see is a compression of wages in a lot of areas. We are going to see disinflation. We are going to see deflation at some point. Let's talk about some turbo trades. So turbo trades, again, we want to use the MTI for our turbo trades. So a lot of the time we're just going to be doing these boring, kind of trades and income trades, boring. Oh, I'm only making 23%, kind of boring. But every now and then we're going to look for something that really gets those greed juices flowing. My greed juices get flowing. I know you don't want to hear about my juices, but the greed juices do get flowing. And I'm like, listen, I like greed just like the next guy or girl. So when the setups are just right, we are going to do that, right? So here's an example. Tesla, it starts brewing early. Sometimes it's just waits and waits, but sometimes it starts to brew early. And then sure enough, we get this massive, massive breakout. And then it gets you out right around here, right? It's not going to get the top. Have you got a signal that gets you the top and bottom? I will buy it. That none of them do. Here's Microsoft, boom, catches it full green. So when you look at the MTI, you're going to go, okay, there's yellows, there's reds. This is part here is giving you warnings, right? This is coming from my volatility sort of metrics that gives you the warning that you need to maybe sit on your hands, you need to hedge, you need to stay away, you need to be careful, right? Environment. Mark wants to hear about my juices. That is really strange. And but hey, anybody who wants to know about them, let's talk later. Apple, boom, MTI turns super green. So right, sometimes and what I believe is there's sort of like a direction of the MTI that can help me too, right? So when I just see a bunch of reds, they're not doing anything, I'm not getting excited. But when I start getting yellows, and look at the slope, we're getting yellows, we get 2 yellow, we get 3 yellow, we get 2 yellow, we get 3 yellow. Now we're 4 green. I'm going, holy crap, what's going on here? And then we get 5, and then we get full greens, 5 greens, and we're just blasting off into the ether, right? That's what gets exciting. So what am I looking at these days? I see beautiful MTIs on NVIDIA, which by the way, we're already trading. Here's Hood, fantastic. I've been telling people about this since $40 in the membership. What else have we got going here? In fact, we have some nice trades on this. I think we have a nice cash machine trade. And then here's your SPY as well. You know, you can put this thing on anything you want. You get this and you just put it on, you know, whatever you're watching, gold, silver, bonds. Here we go. SPY looking beautiful and green. What did Kermit the Frog used to say? It's great to be green or something like that. Well, in Turbo and MTI, it's great to be green. Here's Amazon. Here's Uber. Look at these things. Uber just kind of, oh wait, this is Uber. Sorry, this is Uber and this is Amazon. Amazon, one of my favorites. I think they just go bananas. Look at what they're doing. They're pushing robots again. Okay, here's my freebie think outside the box idea on Amazon. I think an untapped benefit, yes, Sniper Baker. In fact, the MTI is fantastic at getting out. Sometimes a bit slower getting in, right? It lets other people jump the gun, get those false starts, and then, you know, and then they get shaken out. When things turn down, boom. Yeah, I know. I'm worried, Reese. I'm worried about that. I am a little worried about that. I have quite a bit of it. I've trimmed a little. Yeah, that area is getting a little bit murky, and Waymo's doing awesome. So, what was I saying? I lost track of my thoughts here. Okay, so let's talk about Turbo Income. So let's talk about Turbo Income. I want to show you guys. It's unbelievable. I think we've had like 3 losing trades in like 7 months or something like that, or 2? No, maybe 2. Since we launched officially, I don't think we have one. Do we have one? This was a hedge, so this made up for the other one. But we have fantastic trades in here. Here's some. Here's my cash machine. Here's Hood. We were talking about that. This is the boring approach. So some people say, "Listen, Hans, I don't like volatility. I don't like, you know, I want a lot of a nice cushion in there, right?" So we've made 5.2%, 3.75%, 3.75% in 2.5 weeks. Does that sound boring? Because that's 97% annualized. Here's some other ones in the longer term port. 25, 35, 41, 54. We've got a couple on right now. One's up 1%, one's up 8.2%. I think I had another one here. Oh, yeah. Here's the current portfolio. So a lot of closes. These ones are still open. 46, 26, 48, 16, 17, 22, 24, 18. And then occasionally we will get these beautiful, beautiful turbo trades. We closed a couple last week. Why don't I have these in here? We closed a couple last week. I had one NVIDIA, I think it was 248% that we made on that one trade. So the turbos are where you really, really turbocharge things, right? You go, it's time to get greedy, and you can potentially have those, you know, real special trades that really make, you know, move the needle, right? You want to move the needle a little bit strategically where it makes sense. So we've got amazing trades, and I'm the AI guy, so you can bet that you're getting tons and tons of trades in that area, which I think is going to be gangbusters for the next few years. So yeah, Goss, cash machine is steady, huge return on cash compounded. Yeah, some fantastic approaches and trades. You get me in there every day. And Christian, I don't know if you want to drop some. Yep, a lot of them are spreads, right? The traditional income trades. W. Danibal, the traditional income trades are spreads, right? So look at the capital required here: 925, 940, 1200, 1200, 400, 1600, 800, 800, 400. These can be done very, very capital efficiently. Rip Zone 24/7 member chat is down, Mark. Okay. So yeah, very capital efficient. We have some trades that are a little bit bigger. So I showed you some of the longer term trades. So this is a trade where dollar P&L, we made $1,700, and that would have cost 4,500. Here's one that made 950 that would have cost 3,700. Here's one. This one was nice, right? On the hood, it cost 1,700 and made $900. So 54%. So you're going to see different things depending on the markets, depending on what markets are giving us. But the traditional trades, which is really, really a big focus, that is always a focus, very capital efficient. Has the current administration messed up some of your trades? Have you adjusted your future trades for these? The current administration, well, I mean, I'm jumping on all the big themes that I see, right? Regulation pulling back, which is why we've been trading financials. Tech is just, a secular theme that just isn't going to go away. What else? I mean, look, the tariffs threw everybody for a loop there for a bit. But I think the tailwinds are significant at this point, right? Potentially very, very significant. Start getting rates down. The Russell is super shorted. That's probably part of why it's going. A lot of people have this wrong, and a lot of people don't quite realize how big this is going to be for the economy until we start seeing a few job issues in there, right? So it'd be very interesting to see how things unfold. But look at it from an analyst perspective. Analysts are looking at this going, they're just kind of bean counters. They go, well, okay, this, and this, and these ratios and these metrics and growth, and this is where we see this company growing next year. AI is throwing a complete curveball at all these numbers. So I think over the next year, we're going to start seeing earnings reports that are going to be like, what? Like mind blowing. Maybe in both directions, right? People who are doing it right, we're going to get crazy. So that's something Mark and Andrew and we're all going to be looking at some point, where if we start to see certain trends, we're going to be like, holy crap, this could be an earnings season for straddles, right? Because maybe a long straddle, because everyone's completely underestimated how much a stock can move. So it's going to bring in all kinds of wonderful opportunities on the options trading side. And I'll tell you one thing that I tell people, I say, listen, if this stuff is coming for your job, for your livelihood and all that, I'm not trying to fearmonger. But if this stuff is coming for you, one of my favorite ways, I've been saying this for 5 years, one of my favorite ways to hedge is to invest in these things. These buggers, I'm going to invest in them because they are changing the world, and I need a hedge for my retirement. And I need to be with Option Pit, trading options like there's no tomorrow for my retirement, for my kids' future, for my retirement account. The good news is maybe inflation does come down over time and things will get a little cheaper, which is great. But we could be looking at a kind of, there's going to be ebbs and flows like markets do. I mean, there's no question about it, but we could be looking at a kind of period of a roaring 20s sort of thing, where a lot of tailwinds, improving margins, cost cutting, just kind of, productivity gains, rates coming down, because, if AI is truly, as tech has been this way for 20 years, it kept inflation from getting out of control in the last decade. That was a big part of it, right? As well as China and cheap goods and cheap labor and all that, that's sort of changed a little, right? China isn't as cheap as it used to be, but this is going to be something that we haven't seen since the internet, and it may be bigger than the internet. So So that's what is going to potentially improve that productivity and make this a very, very interesting environment for us to trade. And so you've got to be in the right places. So check out Turbo Income. Christian's going to put the link in there. It is fantastic. Everyone's really, really enjoying it. Terrific trades, terrific insight, and terrific people in the program. And I hope you guys really enjoyed it. I think, yeah, much bigger than the internet. I agree, Albert. This is going to touch everything. It's going to touch everything. So, you know, maybe in that AI space we're in 1998, but make no mistake, it's going to be up and down. It's going to be up and down. Luigi, best service in OP. Well, if you want to listen to Luigi, you need to jump in right now. There are various ways to get involved, and it's really going to be fantastic. I hope to see many of you there, and have a fantastic day. Hey, happy 4th of July, everybody. That's right. This is it. I guess we have to rally into the 4th of July. You know what they say, don't short a dull market. Well, there's the SPY again, 625. I mean, it's just gangbusters. Okay, thanks everybody. Have a wonderful day, and thank you for coming and being a part of today's show. See you next time. To boot. Let's see here. Let me grab the boom and boom. Thanks, Jose. I always try to give you guys some value. And if you want more, you know what to do. Okay, that's the end of the pitch. Have an awesome day. I'm sure you guys have to get to something important.